Welcome to Heart of Economy. Today we're going to look at a very unusual story. On one side, billionaires, on another, politics. And then there is the world of finance. And in this case, they all come together in the same narrative. A new activist group has emerged in the United States, and their targets are some of the most powerful business figures in the country. Their goal is not just to criticize them, it's to shake their wealth, their companies, and their influence in the markets. On the first target list are names like Elon Musk, Jeff Bezos, Peter Thiel, and Palantir CEO Alex Karp. These individuals matter not only because of their personal fortunes, but because they stand behind companies like Amazon, Tesla, and Palantir, giants worth trillions of dollars that sit at the very heart of the global economy. So here's the big question. By targeting billionaires, is this movement really targeting the markets themselves? Can a protest campaign really erase hundreds of billions in market value? The Tesla example already showed us that it's possible, which leads us to the real question. What happens if the same playbook is used against Amazon or Palantir? That's what we'll explore today. Step by step, we'll look at how politics, activism, and financial risk have become inseparable. The group calls itself the Department of Class Solidarity, and they describe themselves as nothing less than the war room of the working class. Their vision is ambitious. There are nearly 1,000 billionaires in America, and they say they will investigate every single one of them, expose their connections, and hand that information over to the working class like a weapon. What's critical here is that the choice of targets is not random. Being wealthy alone is not enough. What really matters is having direct or indirect ties to Donald Trump. That's why the first list includes Elon Musk, Jeff Bezos, Palantir CEO Alex Karp, longtime business insider Antonio Gracias, and one of Silicon Valley's most well-known figures, Peter Thiel. But these are not just ordinary billionaires. They are the people standing behind giants like Tesla, Amazon, and Palantir, which means the real target is not just their personal fortunes, but the massive companies they control, companies worth billions, in some cases trillions of dollars. That's where the danger lies, because these kinds of campaigns don't just go after individuals, they aim directly at the value of companies held by investors all around the world. This marks a new stage of protest activism. In the past, demonstrations were often limited to political symbolism. Today, the business world and the financial markets themselves have become the pressure point, and that pressure doesn't just show up in the streets. It shows up on investor screens and a movement of stock prices. In fact, this whole approach reminds us of something markets already know but often forget. Finance is not just numbers and balance sheets. Public perception, political atmosphere, and media coverage are part of the equation, and this new activist movement is going straight after those perceptions. To understand whether this strategy works, we already have a powerful example, Tesla. A while ago, the so-called Tesla takedown protest directly targeted Elon Musk. The campaign didn't just make headlines, it wiped out roughly $100 billion from Musk's net worth. Even Tesla's own board admitted that activist pressure played a role in revenue losses during that period. That tells us something very clear. The value of a company is shaped not only by financial performance but also by public perception. The Tesla case is an important lesson for investors. Reputation loss can now translate directly into financial loss. When investors start believing that a company is about to face damage, the sell-off often begins before any real losses even appear. In other words, perception itself has become a force that moves markets. Now, attention is turning to companies like Amazon and Palantir. Amazon is being targeted through Jeff Bezos, And for a company that interacts directly with consumers every single day, this is a serious risk. If Amazon were to be branded as a pro-Trump company, boycotts could gain traction very quickly. Just a few percentage points of lost sales would mean billions of dollars in lost revenue that will place direct pressure on the S&P 500 index. Palantir's risk is different. This company earns most of its income from government defense and security contracts. If public opinion starts to frame Palantir as a company that undermines democracy, even its government contracts could come under fire. That means not only market value at risk, but the company's entire business model. In such a case, it wouldn't just be investor confidence that's shaking. The company's long-term growth strategy could also be seriously undermined. So, what are the possible outcomes for the markets? Let's break it down. The first scenario is that the movement stays small. Protests remain limited, social media attention fades quickly, and the market impact is minimal. But even in that case, investors still get a message. Even the smallest spark can now become a risk factor. The second scenario is a moderate impact. Protests grow more visible, campaigns spread quickly across social media. Amazon and Tesla face short-term selling pressure. Fund managers cut positions to reduce exposure, trading algorithms kick in, and volatility spikes. The result? Weeks of sharp turbulence. The third scenario is high impact. Boycotts spread wildly. For Amazon, even a 2% drop in sales would translate into billions in lost revenue. That alone could put measurable pressure on the S&P 500. If Tesla faced similar pressure, the entire perception of the electric vehicle sector could be dragged down. This wouldn't just hit one company, it could pull down the valuation of an entire industry. And the fourth scenario is long-term impact. Billionaires realize that being politically visible is harming their companies, and they retreat from the political arena. That would reshape the relationship between business and politics in the US. For markets, it would be the clearest sign yet that political risk is now direct economic risk. Given today's environment, the second and third scenarios look most likely, because in the age of social media, even a small protest can snowball into something that changes the decisions of global investors in just a few days. The language and imagery used by activists may officially avoid calling for violence, but they are undeniably provocative. Wanted poster-style images frame billionaires as if they were criminals, and when visuals of Tesla's Cybertruck set on fire circulated online, incidents of Tesla vehicles being vandalized and even set on fire increased at the very same time. That raises serious questions. Financially, the meaning is clear: uncertainty. And markets hate uncertainty more than anything else. A factory shutting down, a showroom being attacked, supply chains disrupted by protests, all of these hits the balance sheet directly. But more importantly, they undermine investor confidence. And when perception is damaged, stock prices tend to fall faster than the real losses would justify. Reputation risk becomes the most powerful factor here. Once a company gets pulled into a political conflict, that label tends to stick for years. If Amazon is branded as a pro-Trump company, it could face consumer losses that last a decade. For Palantir, being seen as aligned with authoritarianism could threaten major international contracts. This is where ESG factors come into play. Environmental, social, and governance criteria are no longer just about ethics, they are financial decision factors. Social risk has become the most visible part of ESG, and this risk can easily influence the allocation of billions of dollars by major funds. No matter how strong a company's numbers look, once it gets caught in the middle of a political battle, those numbers lose meaning in the eyes of investors. Tesla has already proven this, and it will not be a surprise to see Amazon or Palantir face the very same reality. In conclusion, a new activist movement in America is directly targeting billionaires and the giant companies they control. The Tesla case already proved that these campaigns can have very real financial consequences. In the months ahead, Amazon, Palantir, and others could find themselves under the same kind of pressure. The reality is clear. Risk in the markets today is no longer limited to interest rate decisions or quarterly earnings. Social movements, public perception, and activism are just as powerful as financial statements. Thank you for watching Heart of Economy. If you found this analysis valuable, don't forget to subscribe to our channel and turn on notifications. Because in this new era, where finance and society collide, there will be many more critical stories to unpack. Stay tuned. See you in the next time.